Okay, we are going live right now. Thank you, everyone, for stopping by. Don't have any fancy music for you today, but I do have very valuable information, and we're live. Thank you very much for joining me. Greatly appreciate you tuning in. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. This is my post market live stream. I do this every Monday through Thursday at 4:30 p.m. So grateful that you decided to spend some of your valuable time with me today. We've got some really heavy duty things to go over today. We're going to talk about Apple's privacy initiative and Facebook. By the way, Facebook's earnings came out, and Facebook is moving up pretty good in aftermarket trading. The conference call starts pretty soon. We'll take a look at the stock after aftermarket trading. There's been so much news and controversy surrounding Facebook. We're going to talk about how the market did today, and more important, we're going to talk about a trend that is showing up in the market that I think it's more optimistic than not. It doesn't guarantee an up market by any stretch, but it is a good thing that the stock market is becoming much more discerning, and it's not even questionable anymore. So anyone who's out there saying, "Oh, the market's just being held up by the top 10 largest market cap stocks and that's the whole bowl of wax," you know, you're wrong. That ship has sailed, and maybe it was true. I'll say, pre up to the summer was this past summer was true, but I don't think it's true anymore. So let's roll the quick intro, and then we're going to get into a really good show. Here we go. All right. Thank you for joining me. If you're just joining us now, we're just getting started. We're talking about a positive trend in the market. That's the whole thumbnail over here. You see that? A positive trend. The stock market is getting more discerning. I think it's an important positive. Whether or not the market goes up now or later, that has nothing to do with this. This is a trend that I think is important, that investors are becoming more discerning. The other things I want to talk about, but I just, this is one of the shows that could make it 10 hours, but I'm just going to make it feel like 10 hours. So it will only be another 27 minutes, maybe a little bit less. While you're watching this, hit me up with your questions in the comments. Words of appreciation, words of encouragement are always appreciated. Let me know where you're watching from. And you know what? Hey, do me a favor, give it a thumbs up, give it a heart or a celebration. Like if you're watching this on LinkedIn, wherever you're watching, the platforms have different, different reactions. YouTube doesn't, but if you're watching from Facebook or LinkedIn, give me a reaction. I'll see you out there. Let me know you're watching. Keith is out there. Keith, thank you very much. Great to have you here. Keith, I think we need to have you as a guest appearance very, very soon. So let's talk about doing something next week if you're up to it, or the week before. By the way, quick programming note: I will definitely be out Thursday, probably Wednesday. Thursday, I'm doing that thing that we're all, you know, Thursday, I'm doing that thing that we're all supposed to be doing when we hit our 50s, men and women alike. That big thing, it's called a colonoscopy. Yeah, that's right. So I'm going for a colonoscopy on Thursday, which means Wednesday, it's just clear liquids. I don't know what kind of mood or state of mind I'm going to be in by the time 4:30 rolls around on Wednesday. So I figure better safe than sorry, and not give some hallucinatory, hangry, low blood sugar, cranky ass mood MFer kind of show. And we'll just, come back the following Monday. And if there's something really important, I'll be back on Friday with a quick live stream update during the day if anything crazy is going on. Stock market's in a strong trend, folks. So let's take a look at where we stand here. Okay, the Dow up to a new record high for the Dow following last week. Nasdaq is almost there, but the S&P is at a new record. Okay, let me put the cursor over here. Okay, so new records all around. I enlarged this. Hopefully, you could see it nice and clear on your smartphone, on your screen. While you're watching this, hit me up with questions, words of wisdom, words of encouragement are always appreciated. Did I say words of appreciation? Yeah, those are appreciated too. But I feel like the words of appreciation are from me to you. So thank you. I will be checking the comments momentarily. The S&P new record, though, 45.66. I see some calls at 4,700, 4,800 by the end of the year. We'll see how it goes. Gold is something we talked about last week, and I said gold is starting to look a little better. It's all of a sudden it's moving up. And we spoke about this last week on the live stream that Bitcoin, crypto in general, has taken over as the de facto inflation hedge. And I said, it seems like gold is getting a little bit stronger. So maybe people are getting back to a certain reality that gold has been a store of value and inflation hedge for thousands and thousands of years. There could be room for both, by the way, as an inflation hedge. But I think if I had to pick one or the other to catch up, either meaning Bitcoin going down or gold going up as far as people jumping into an inflation hedge, I'm more thinking that gold is the one that has the catch up. Okay. Bitcoin has more to it than just an inflation hedge. It's becoming more and more mainstreamed, and more investors are getting involved with it. So I think crypto in general has natural buyers coming in just because the market for ownership of digital assets is growing. Eventually, the market will be flooded with too many digital assets and we'll have the washout. From everything I could see, it doesn't look like we're there yet. I don't think we've created that last NFT that is the straw that breaks the camel's back. Maybe that would be a good NFT, just a picture of a straw breaking the camel's back. I don't know. I feel bad for camels every time I say that. I love camels. Just want you to know. Okay. Oil off a drop. Big deal. It's nothing. 10-year treasure off a little bit. The VIX continues to stay low at 15. Remember, I said, under 20, the market rallies. It's well under 20. VIX is down pretty good. I think we could see the VIX go, well, you never know what's going to happen with the VIX. The thing is with the VIX, it's such an explosive index, and typically 5-6% moves in a day are very common for the VIX. But we'll see. It's at 15.24, and I said under 20 is the line of demarcation. Okay, let's take a look at the Rust 2K. The Rust 2K right there. That is the Russell 2000 index, up 0.93%. How does 0.93 compare to the other averages? Well, it's the best one. It beat out the Dow, Nasdaq, S&P, beat out gold. So small caps, big time in favor today. That's a pretty good move, almost 1% on any index. So let's take a look and just see who's out there before you guys think I forgot about you, okay? All right. Gary, GG. Hey, buddy, what's up, man? So nice to see you. Great of you, to tune in. And maybe you're just listening on your way home from work. I know that this is about that time. So hopefully the traffic's not too bad. I'm looking at the window in front of me. It is like the weather is just looking so ominous. I hear we're supposed to get such a crazy effing storm tonight on Long Island. I hope it's okay where you are. Keith is here. You'll love it. You mean the colonoscopy? I've had them before, so it's not my first. It runs in the family, so I get checked out every couple of years. So thank you very. I love the anesthesia. I always tell my wife, when you come in and wake me up, don't wake me up so fast because it's like the best nap you've ever had. Scott is out there. Hey, Mitch. Hey, Zuck. What's up, man? I love that picture of you and your wife at your wedding. That's amazing. I love that. Anyway, it's nice to see you. Yeah, that's shitty. You're funny. Not only you're funny, but I think it's just funny that we're putting it in the live stream. But hey, this isn't TV, right? It's cable TV. Thank you very much. I appreciate that. I'll take some pictures for you. We'll do some selfies and stuff, and I'll share them. I'll share them with you. Nah, maybe not. I'll be out anyway. So let's take a look what else we have to know. I want to get into a couple things. Let's take a look real quick. It's not showing up on the screen. Right? Oh, there it is. Okay. DWAC. Do you know what DWAC is? DWAC. All right. Truth Social, DWAC. This is Digital World Acquisition Corp. It fell today after hedge funds sold their stake. Digital World Acquisition Corp. You have to wonder if anybody knew that this was going to surge in advance. But this is the Trump stock is what a lot of people are calling it. It's the SPAC stock linked to Donald Trump's planned social media platform. It dropped in price today after booking huge gains. We'll get into that in a moment. Okay, but it's linked to Trump. It's going to be where it's the way of Trump's new social media company to go public. We'll see how it goes. Just curious what the quote is on this. I want to share this with you. And here we go. So I want to show you something. Okay, this was $175 a share, like last Thursday, and it's 83 on the close today in New York. So 87 after market's up $3, but it closed at 83. 175 to 83. A lot of people got caught up in the enthusiasm at 100, at 120, at 150. Some sucker paid 175. And then the money goes out. Let me explain something. When you see these stocks go up like this, okay, it's a meme stock. Okay. And they fly up on retail buying. The early investors are the smart money, the late investors are the dumb money. It goes up. This is not like the kind of thing that, Fidelity or Oakmark or some other fund is going to come in there and put the stock away and hold on to it for the next 5 years or 10 years. This is just people who are in it for a quick trade. It's the greater fool theory. I said the same thing about GameStop, about AMC, about Clover, about so many of the SPACs. I'm not just picking on this SPAC. If anybody's like, oh, you're just picking on it, it's Trump's. No, it has nothing to do with that. I don't really care. I really don't. It's no secret that Trump was going to launch his own social media platform because he was booted from Twitter and Facebook. So he's going to go here. But I'm just letting you know that people were celebrating this and bought it. You're licking some wounds now. Maybe it'll recover. It was up 3 and change in aftermarket. Now it's up $2.95. I wonder if anybody had advanced word because it went up a hell of a lot. Somebody made an F ton of money in this. Okay. So but I mean, that's all, but it's an of interest thing in the market whenever a SPAC takes off. And we're looking at this one. So this is called the Trump stock. The last Trump stock was DJT, Donald J. Trump, which was the casino company, which basically, went to zero and got delisted. Maybe we'll have better luck with this one. But I'm just saying, you have to be careful with this stuff. It was 175. I want you to make money, not get caught up in enthusiasm. I have to say, SPACs are something that, and meme stocks are something that I've avoided. And it's basically because it's one thing for me to trade my own money, but to try to be that nimble and take that much risk with actual client money, I think is more than irresponsible. So I'm just not going to do it. But, knock yourself out if you want to do this on your own. Let's see here, man. Scotty's out there. Always good to see colleagues who are smart. Me? Hey, man. Hey, thank you, buddy. Kudos, Scott. And you're smart. And you're a black belt, a keyboard player, and a pilot, and an overall cool guy. So you got it going on, buddy. And so I know these things about you because we're friends on Facebook. Okay, I don't recommend anybody play that game with this SPAC. Social media company is going to be SHIT, in my opinion. Yeah, well, we shall see. I think it's all interesting. Right now, we're going to talk about social media companies, and Phil is out there. Phil, thank you so much, man. Love you, brother. So good to see you. And we are having a good time today. So let's move on to another thing here. Still, we're still going to keep it in the controversial lane, I guess. But Okay, let me get you. Let me get you off the screen there, and let's go to screen 4 again. Okay, pop myself in here. All right. So uh, today, Facebook was up. Let's see. Let me just go right to Facebook and get you the quote. Okay, Facebook was up $4 today after over the weekend. The whistleblower, I forgot her name. Houlihan. I forgot her last name. She turned over more documents where she's going to be speaking to British Parliament or something. But the point is, it was up 1.25% in the regular session. They came out with earnings. They beat revenue. They beat on earnings, not revenues. But the stock is surging after market trading, probably because it was a little oversold. People got a little fearful. Maybe there were a few people shorting it. But the real deal is advertising continues to be strong. That's what we have to talk about because I think the issue with Apple's privacy settings is going to be a much bigger deal. It's the money. It's not the reputation, right? It's the money. So let's talk about that. But just I have my notes here so far from Facebook. Facebook added 1 million new subscribers in North America between just the U.S. and Canada. That's the most subscribers in the first time they've actually added subscribers in a year. They've been flat there. They also added subscribers. I'm sorry, mother. I hate when I do that. When I say subscribers, let me change that. They don't have subscribers. Daily active users. Let me go back. Facebook added 1 million DAUs, daily active users, in the United States and Canada. First time in a year that they've added any, and it was 1 million. It was way better than expected. They added a lot of monthly active users as well, plus they grew internationally. So that is one thing. They addressed the controversy. I think their whole point of controversy is, they're saying, the old expression, guns don't kill people, people kill people. They're saying our social media platform does not hurt people. People hurt people. So who do you police? And that's why it's so controversial. And that's really just this is going to be controversy in the news a lot. And Facebook is also talking a lot about the metaverse. And I just want to explain what the metaverse is. I actually pulled it up here so you guys could get a better view. Okay. This is from Business Insider. Maybe the metaverse can save Facebook. Maybe. The metaverse is basically when you take the internet, blend it with, um, virtual reality and augmented reality. And it's more than just wearing goggles all around, but you're actually in a metaverse world that pulls in everything from the physical to the internet. And it's almost like a different world. And that is something that Facebook is working on, and they get to, literally bypass the internet because you just jump on there with the metaverse. Uh, you know, it's truly groundbreaking, and now they're saying they might change their name to reflect their metaverse. It's kind of like how Google was called Google, and then Google changed its name to Alphabet, still retaining the name Google for their search business, but now it's called Alphabet. So maybe Facebook will still retain the names Facebook, WhatsApp, and Instagram, but they'll all be under the ownership umbrella of Metaverse or whatever they call it. I think they should call it Mitchiverse. What do you think? The Mitchiverse? Give me a thumbs up if you think they should call it the Mitchiverse. All right. Here we go. By the way, anytime you want to do a show together, let me know. I think that would be a lot of fun, Scott. So yes, we'll definitely get back to that. I think that'd be a lot of fun. Facebook is in the middle of a PR. This isn't big enough. Let me make this bigger. Okay. Facebook's in the middle of a PR battle. Hasn't been this bad since the 2016 Cambridge Analytica scandal. Okay, so we know all about that, but that's not really the scary thing. This is the scary thing for Facebook, okay? Because when you want to hurt Facebook, you have to hurt them where it hurts, and that's the wallet, okay? So Let me explain to you the right paragraph. All right, here it is. Okay, I want you to follow me here because this is like really big. All right, like this could have been a whole show itself. This one paragraph. All right, just I'm going to read it aloud. You can read it with me or just listen up. Apple's new policy requires apps to ask users if they want to be tracked. Many users have opted out of tracking by popular apps, including Facebook and Snapchat. As a result, those apps are getting less data on consumers' habits and interests and can't target ads at users as effectively. So let me break this down for you, okay? It's making the cost of ads go up for marketers. So if you're a company like Steelcase, or if you're a protein powder maker, and I'm just using these as examples because they're the examples that are used in this article in the Wall Street Journal, that when something like 85% of all people, if given the choice from Apple, will opt out of app tracking. So if you go into Facebook or Snapchat, it through your iPhone or whatever, iOS device you have, these companies can't follow you around on the internet to see what your interests are. So maybe it's, imagine, you go to Starbucks, the barista serves you your, pumpkin spice latte. Because I was going to do a meme before, pumpkin spice financial advice and everything nice. Oh yeah, it's got a nice ring to it. Maybe I should do a meme for that. But once you get your coffee and you leave Starbucks, I'm talking in real world stuff, not internet world, not virtual world. The barista doesn't get in your car and ride along with you and watch every move. So let's say after that you go up to the Ace Hardware store, because there's an Ace Hardware store from the Starbucks near me, and you're looking at Benjamin Moore paints and paintbrushes, and then you go to Best Buy up the road and you're looking at a couple of cameras, and then there's no one following you to do that. But if you do that online, then what Facebook will say is, hey, Best Buy, I know somebody who went to your store. You could send them a targeted ad to try to get them back on your website and try to, get them to buy something, give them a coupon or some kind of offer or whatever, and get them to buy. And, what is Best Buy going to pay for that ad? That's like so targeted. And that's your privacy. So the point is, Facebook, really trying to choose my words carefully. Facebook is a free service. And I've said this, I've been writing about this for years. If the service is free, if the product is free, guess what? You're the product. So in exchange for using the free app and enjoying the free app of Facebook or Snapchat, Snap, you're agreeing in their terms of service to let them follow you around in the internet, stalk you, if you will, so that they could learn about you, see what your interests are. So when I look up colonoscopy somewhere on the internet, all of a sudden I get an ad for Cologuard on Facebook. Cologuard is a way you could send your stool sample in and have it analyzed with a 92% accuracy if you have colon cancer or not. If you didn't know, but we're adults, we could talk about these adult type subjects, right, without getting squeamish and go, ew, okay, ew. That's me. I do that, not you. I'm the immature one. So that's what this whole thing is. So Apple is allowing you to opt out of being tracked, and the Facebooks of the world don't really have much to do about it. There's not much they could do about it. Once you're on Facebook's site, if you go to Facebook, I think through Android, then it's not a problem. Now, I don't know how else people are going to access that explains all the Viagra ads. Thank you. You made my day, man. That was funny. So remember, like years ago, my cousin's wife was pregnant. And she's like out to here, and I yelled out in front of the whole family. So the Viagra worked. That's great, And that was when like Viagra was like new to the market, and it was just like such a wise ass funny thing to do. Today it's like whatever, been there, done that. So that's the whole deal um with that stuff. Okay, so once again, advertisers are finding it harder to reach potential customers, according to the executives, and prices of these ads are rising because if you're getting fewer targets to sell to on Facebook, then Facebook is going to sell those for more money. Okay, and this is true for companies struggling. This is many of those companies are struggling to cope with the Apple change. You see, small businesses have gotten so accustomed to targeted Facebook ads that it's amazing how many businesses never even had a website. They just grew up on Facebook, and now like their way of life is threatened. Now, is it too bad on them because your privacy? And is it a problem if these companies track you to sell you more targeted ads? Because if you don't get targeted ads, you're just going to get spammed with ads in general that might have nothing to do with what you want. Facebook will figure a way around this once you're into Facebook, another way to go about it. Or maybe Facebook will just charge you like, $2 a month or something instead of being just an ad business. Okay. So that's enough about that. All right. So let me close a couple of screens here. All right. And let's talk about some stocks. I want to show you something here. Okay. Let's get back to the screen. We started talking about stocks are becoming more discerning. The stock market is more discerning than it was. During the pandemic, industrial stocks, cyclical stocks, in-person stocks, cruise ships, airlines, they got crushed. While screen stocks, the ones that you look at, the ones that allow you to, the ones that you look at, that's better when I use a prop. Okay, here's my family. Can't even see it. The ones that you look at that allow you to work from home are the stocks that got all the benefit of investor money. And it focused a lot on Facebook, Amazon, Netflix, Google, okay, Amazon, Apple. Did I say Amazon twice? I don't know. So that's what really worked. And the feeling for a while was that it's just a concentrated group of stocks that led the whole market higher. And it wasn't just a feeling, it was true. That was reality. But since then, in the last few months, so many stocks have cratered. You don't notice it in the S&P 500. Yeah, I know like a week and a half ago, the S&P had like a 6% correction over about a 2.5 week time frame, which is not that unusual and not that big of a deal. And it's actually pretty normal. Just we're so spoiled with going through so long without that happening that when it does happen, it's like a shock all of a sudden. But so many stocks have been going down, breaking below their 50-day moving average. Their 50-day moving average is going below their 200 moving day averages, all this technical mumbo jumbo, which is just a way of saying there's a lot of deterioration in the stock market. Now, the stock market hit a high today. But while it's hitting a high, Amazon, which was 3,700, is now 3,300. Okay. Facebook, which was 384, is 328. That's like a $38 stock going to 32. That's a pretty nice size drop. Microsoft is at highs. Nvidia is at highs. Google, not quite. But it's not just those stocks. If you take a look at PPG, or let's take a look at some of the industrials, John Deere, 400 to 35. Okay. Oshkosh from 137 to 106. FedEx, 319 to $235 a share. See that red line that I'm showing over here? See that? All right. If you can't see it, just follow me along with the numbers. Okay. Caterpillar, almost 250 down to 200. These are significant drops in a lot of these companies. Cummins Engines from 277 to 240, 241. And not every stock went down like this. I'm cherry picking. Boeing 278 down to 212. All right, that's a shellacking. UAL. Uh, there are so many others in so many sectors. What about? I wrote them down. What about IBM the other day? Down about uh, it was down $13 in one day. PPG Industries, they make paint, that got crushed. Intel was down over 10% last week in one day. Whirlpool. And these companies are coming out saying they either can't get parts, they can't get labor, they can't get materials, whatever it is, supply chain issues. Investors are taking plenty of stocks out to the woodshed and just decapitating these stocks. So the market has gotten really good at separating what it thinks will work out and get through this tough time with the lack of labor and supply shortages and what won't. To me, that doesn't necessarily mean that the stock market has to go up. But if you're worried about the danger of a market that is only being pulled by fewer and fewer mega cap stocks, that all the money's getting concentrated to a few stocks. So if those stocks tank, we're all in trouble. That's not what's happening. So the fact that we made a new high today in the S&P 500, it's really exciting to me because it wasn't because Facebook, for example, helped push it to new highs. And that to me is really exciting that it's happening on a more diverse group of stocks. And that's what I mean when I say the market has gotten so much more discerning in how investors are picking and choosing winners and losers on the average. So that's my story. I'm sticking with it. I greatly appreciate everybody sticking with me today. I know it was a little bit of a long show, and we've got a lot more things to talk about this week. And I'm going to end it here, but I will definitely be back tomorrow. And thank you very much for watching. Really appreciate it.